Hi there. Thanks for tuning into our podcast, The Secret War on Cash. I am Dean Heskin, the president and CEO of Swiss America Trading, which just flashed on your screen there for those of you watching. I have my co-host Chris Agelastos with me. Chris, good morning.
Good morning.
Oh, look, we're both wearing blue today. We're not in a blue mood, but we're wearing blue. Let's get right into it here, Chris. We've got a new thing that's on the table right now, and I got to be honest with you, I never even really thought about this like this would ever be a thing.
Yeah.
Trump's 50-year mortgage proposal, this title says, is a bad idea. And for those tuning in, we're not picking on President Trump, not even close. We are just bringing you an article here because it has to do with something having to do with the financial markets. And I mean, mortgage is debt. I would think most people don't prefer debt, but many of us have to have mortgages.
Yeah.
Um, a 30-year mortgage seems like huge. And I know many people, myself included, do what we can to even chop down that time frame to less than 30 years as much as possible by getting it maybe a 10 year, by getting a 15-year, or just paying it more quickly.
hmm
And every time, mortgages I've had throughout my life, Chris, they show you when you're signing off on everything, your amortization schedule. And on a 30-year mortgage, it's like frightening. It's
Yeah.
actually frightening because if you had $100,000 loan by the time it's all said and done, depending on the rate, but rates at where they're at current levels, I mean, you're going to pay probably $350,000 or somewhere in there on a 30-year mortgage, just over the course of that period of time.
Yep.
So
Yep.
I can't even I didn't try to do this. I should have done it before we recorded today, but like I don't know, can you even run an amortization schedule for a 50-year mortgage? Do the calculators do
That's
that?
a good. Yeah. There certainly are some that will, but I bet all the ones on mortgage websites are geared just for their own loans, which typically cap out at 30. So yeah, the average person, would have to go to their own resources to be able to calculate that.
Well, I'll tell you what, I mean, as I got into this article, they're spot on, I believe, in some of these points, why they
hmm
believe 50-year mortgages are a bad idea. The first of which being, the I think the concept of it, and this somebody presented this to President Trump, by the way. This wasn't
hmm
necessarily his doing. He just took it to social
Sure.
media and whatnot. But it was, in fact, I think it was, yeah, it was Bill Pulte, who's a FHFA director now. But the first thing they mentioned, where it just shows the cornerstone of this, is I think somewhat flawed. You know, they believed, or what they said is that it'd make homes cheaper so people could afford to go get it. And what they mean by that, by stretching a 30-year payment into a 50-year payment, yes, the payment would go down, but we're in Arizona here, and the market is still pretty much s- still hot, let's say. I mean,
Yeah.
product is still being sold, prices really haven't gone down that I'm aware of anyway.
No.
And the bottom line is that the I agree with this because we've watched this, especially in Arizona. Like all that's going to happen is it will actually not only not make houses less expensive, it's going to actually make them more expensive because you've broadened the base of people who can now go buy a home. And
Right.
so, that's a problem. And it does get into, in this, it doesn't just say, hey, this is a bad idea and this is why it's a bad idea, but it also gives some good points of what could be done, like the titles here. And I'll let you talk about it, but the good
Yeah.
kind of financial engineering, addressing demand the old fashioned way, a better housing agenda. All these things they make perfect sense. And so, you know, I don't know what your thoughts are on this, Chris, but if I had to vote on it personally, I would say let's not do the 50-year mortgage thing.
Yeah. I mean, I think the average person, unless they're running the numbers, they may not realize how much more interest they would be paying to go from 30 years to 50 years. It's significant, and the other challenge with that is that you build equity at a much slower rate. We all know, at least all of us that have bought homes and looked at the paperwork. When you're making those first few years of payments, almost all of your payment is going to interest. You're,
That's
you're
right.
paying down, a small amount of principal as it is. Now extend that loan out from 30 years to 50, and you're paying that much less principal into your home. So whereas maybe in a typical situation now, you can buy a home, maybe you live in it 5, 6, 7 years, and you've been able to build up enough equity that you could sell your house and relocate if you need to, maybe for a change to be closer to family or for a different type of job. Well, if you're building equity slower in your home, you're going to be upside down longer, and it's going to be even harder for you to move. You're going to, in essence, be sort of stuck in that house, which isn't a good thing. That happened to a lot of people around 2008, 9, 10, when we had the housing crisis. A lot of homes went backwards, and people were essentially stuck in their homes, and a lot of people just chose to walk away and leave them empty. Right? There were so many people that weren't paying their mortgages that even the mortgage companies were letting people stay in their homes for a year or longer,
Right.
without making any payments, because at least they knew somebody was in there and was probably taking care of the property, and they didn't want vandals to go in and trash the place. So there are definitely quite a few downsides. While I totally understand the need to make housing more affordable, so that people can purchase their own home and start to build equity in a tangible asset. I think there are good and bad ways to do it, and I don't think this would be the right way. Even if it works for a few people in certain situations, maybe that's one thing, but certainly not as a widespread policy that 50 years is the new norm.
You're right. Yeah, I mean, bottom line is you're just creating a tremendously greater amount of leverage in the
Hmm.
marketplace. And you hit on that point really well. I mean, it takes, by and large, it takes, if I remember off the top of my head, like roughly 15 years of payments before you really even at all start, getting where a good portion of your monthly
Yeah.
mortgage payment is going towards your principal. And
Hmm.
that obviously dynamic will change. I would imagine the math works out to be pretty much the same. But then you're right. What if and when the market has, a pullback? Because the real estate market is not like unlike any other market. Throughout history,
Yep.
it goes up, it goes down. And now you'll have all that much more leverage in the marketplace with that kind of correction. And then how many people are going to be walking away from homes or defaulting and the mess that's going to create with it. So
Yep.
again, like I say, if I had to vote on it, I would say no. And I do like some of the points that, again, for those of you tuned in and to click on the link, it talks about, some very positive and constructive ways that our government could, create this same kind of positive move in the housing market without, basically creating that much more leverage in the marketplace.
Hmm.
So kind of related to this, let's look at our next article. It says, warning, all of this is going to unleash inflation. And there is, a lot of things that have been done, here recently, especially with, Trump. And in fairness, as we've talked about in other podcasts, like, there's a mess, financially speaking, out there right now that he walked into, and he knew what he was doing when he walked into it, and he has to try and clean it up. But what they're doing right now, that you have they're saying the first point here in this article, they have an inflated stock market bubble, an inflated housing bubble with now this 50-year plan they say would just only make that worse, which we would
Hmm.
agree, you and I both agree with.
Yep.
The fiscal spending programs, are running rampant right now. And then they're getting, start talking as well about all the stimulus checks and things of this nature, where there's just so much money and inflation. I remember back in college, like in finance and economic courses, that it was a professor, Charles Flans, I think his name was, one of my professors at ASU. And I don't know if it's him actually, it's another guy, doesn't matter. But the point is, he said, inflation is just more dollars chasing after the same number of goods. And
Hmm.
that is exactly what we have at play in our economy right now. I mean, they're just flushing so much money into the system. And again, going back to what my professors talked about, is like that's what creates inflation. So we can't expect inflation to go away, because all these things are like if you're making a cake, these are all the ingredients to make the cake. If you're talking about how you create inflation, these are all the ingredients to create inflation.
Yep. Yeah, inflation isn't going to slow down here, and I know a lot of people, especially on the left, will probably use this as something to beat up the Trump administration for. But they're at the end of the day, when he came into office, both his first term and now his second term, he's got to deal with the reality of the situation that he's walking into. And we're in a situation right now where we can either keep the foot on the gas and continue this spending and injecting dollars into the system and keep the economy running, which does mean a loose monetary policy, a lot of money printing, expansion of credit. Those are things that will cause inflation and create a bubble, which is not good. But the alternative of backing everything off could cause the economy to grind to a screeching halt, and now all of a sudden the value of our dollar plummets as well. So you've really, I hate to say it, but it's I think it's the lesser of two evils. Neither situation is great. But I think right now, keeping the foot on the gas pedal and keeping some steady growth ahead is the better of the two options, because at least that we hope growth can actually catch up. Technology can cause more growth in the economy and make up for some of the spending that we're doing now. So I do think at least he's trying to invest in infrastructure and invest dollars in the country, which can help long term. But it is a bit of a gamble, and at the moment, I think people need to buckle up and be safe. I mean, that's why they're talking in here about just preparing for inflation and shifting some of your dollars into assets that can at least protect you from some of the negatives that are probably going to come along with all of this.
Which is where gold and silver come in. And for those of you tuned in, if you're not involved in gold and silver, or if you already are, and you need to get a little further involved in gold and silver, contact our office. You can call us at 1-800-289-2646. You can text us at 1-800-289-2646. And you can also visit us online at www.swissamerica.com. And these reasons that you've just kind of gone through here quickly, Chris, is
Mhm.
why we created the report, The Secret War on Cash. I mean, this is the war on cash, on your finances, my finances, those tuned in finances. And look, is it intentional? A lot of the war could be considered maybe inadvertent, meaning like they are having to just make decisions based on the cards that they've been dealt. But nonetheless, at the end of the day, that doesn't change the fact that it has a consequence or is taking a toll on each and every one of our personal finances and our retirement, our savings, our income, et cetera. So, all right. Well, thanks, Chris. We will
Yep.
certainly be talking more about this, I'm sure, in the future, as it looks as though this engine isn't slowing down. It looks like it may just be speeding up. And if you're not subscribed to our podcast, please do so and follow us on social media as well, as we'd love to keep in touch with you and bring you more information just like we have today. Have a great rest of your day. Talk to you real soon.
Yep. Take care.